Hey, Daniel. See you
How's it
driving,
going,
bro.
Yeah, I'm driving. I'm away for a couple of days. Actually going to the office. How are you? You alright?
Yes, good, thank you. Good, thank you. Good, good, good. How are you?
I'm okay, you know.
Excellent. Excellent. Okay, I'm so sorry we're running late. I'm not gonna have that long. I only got about 20 minutes. So let me jump right in. Let me jump right in. Hey, Lavilia. Hiya, darling. Okay, so this is a training. Yeah, just going over the confirmation, just going over the rules, just making sure that you guys understand how to use the strategy. And also Mulberry is speaking with the creator to see if we can get another one-to-one with her as well. So let me just go through the strategy in terms of points, and if you have any questions, feel free to let me know. The first point is looking at the overall trend of the trade. Here we can see that we are in an overall downtrend. We are in an overall downtrend. However, we are in an upwards trend. You know, not, I wouldn't really call it a trend, but we're moving upwards before continuation, it seems. So we can look at certain points to see where the market may start pushing down or pushing up, depending on where the market is. So as you can see, we had a continuation, we had a pullback to minus to +3, and then we have the trend continuing with slight pullbacks, and then we have another sort of, this is sort of like the, I wouldn't really call it the biggest pullback, but this pullback is meeting R8 like the previous pullback. So we can see that from R8 previously, we went into a sell. It created a double bottom here, which is like a W pattern. It created a double bottom, and off of the back of that double bottom, it actually started to move up. It's gone back to R8. Potentially, it could start coming down from here. So that is a very key level for you to be looking at sales once your EMAs start to cross. So just speaking a little bit about what you look out for when you're in the trend. That'll be the first thing. The second thing is your EMAs. So once you've set up your scanner, you want to ensure that you've got 50 EMA and 20 EMA in your parabolic SARs all on the chart. You can customize these if you want with colors, if you feel like to get fancy with it. If you want to leave it how it is, you can leave it how it is. The blue EMA line. So once the blue EMA line is on the top of the red EMA, we are looking for predominant buys in the market. Yes. We will be looking at predominant buys. If we look, I want to just quickly highlight something real quick, because sometimes we take the trade when it's consolidating and we didn't really identify that it was consolidating. And I just want to give you something to sort of look out for to kind of identify when the trade is consolidating a little bit, just so that you can just avoid that and just sort of wait for the complete breakout. And that might take some time. So that might mean that your trade isn't ready at the time you're looking at the chart, but that does mean that you can write down this currency pair and come back to it later and have a look to see when it has broken out of that zone. So, you know, this market did start to consolidate roughly around 23rd of April, where it started bouncing up off of the S2, and it came down to -1. It didn't quite get back up to S2. Didn't quite break down past -2 either until it got to S2 here, and then it broke. So you would have been looking to say, okay, I haven't seen yet for a buy, even though our EMAs haven't crossed anyway, but I haven't seen that this market is properly trending upwards yet, because of it hasn't really given me any indication, because it's still sort of trading up and down within this range. Yeah, so that's a good thing to just say to yourself, okay, I'm going to wait until I see a clear break of maybe S2, because not only are you seeing that it's closed above the previous high, right? Not only have you seen that, you've also seen that the candlesticks now are starting to move upwards. Obviously the blue EMA crossed over the red here, so it's a potential time for you to get in, but as I'm saying, even though the blue line crossed, we didn't break above S2, so I'd kind of be a bit reluctant to get in, just because of it could have gone to S2 and reversed. All right, just because it has been consolidating. But the blue line crossing above is a good sign anyway, but I'm just saying personally, I just want to wait for that extra confirmation. Candlestick closing above the S2 zone, which would have been this one, which would have been for me to say, yeah, I'm ready to go in this trade. Is clearly broken above the resistance points that it was previously resisting at, right? Because even if we got in here, it still resisted a little bit until it broke. Hope you guys are with me. Yeah. So when the blue line crossed over the red, we are now looking at potential signals to be getting into this trade. What are we looking for? So the first thing we want to be looking out for is our candlestick that has clearly broken across both lines, both EMA lines. Our candlestick that's broken across both EMA lines. And to identify it, I have identified it to be this candlestick, 24th of April, 3:30. The next thing I'm looking for would be my Doji candle. I hope I do this right on the thing. I always do that wrong. Yeah. My Doji candle. Where is my Doji? Is my Doji present? My Doji is right here. It's a small Doji, however, it's still a Doji. I mean, the smaller the better for me. So the Doji is there. You can see that. Hope you guys can see that Doji right there. The next thing I'm looking out for would be a parabolic SAR below my qualifying candle. Well, yeah, qualifying candle, the candle that broke the structure. And I see one parabolic SAR right here. And then I want to see my stochastic. Am I not going to learn? I'm really not going to learn my lesson, am I? Never going to learn my lesson. Sorry, I'm going to learn my lesson one day, guys. My stochastic down here, my blue line, you know, directly above my identifiable candle is above my red line. So all of those things have lined up this chart for me to say, okay, potential trade, looking like we're ready to get into this pretty soon. But what I will have to wait for, though, on the other hand, is for my blue line to cross over, because at the moment it's not fully crossed. So we got the candle that's broken across both red and blue lines, but our blue line hasn't crossed over the red. But this is the indication that that's going to happen soon. So what I'm looking out for is the candlestick now that opens up above my blue line. Okay, the candlestick that's opened up above my blue line, and I can identify that as this blue one, green candlestick that has done that. It's literally right on the money. Like it just happened as the cross. So if you're lucky to catch this trade this early, then you're good. But if you didn't catch it this early, obviously you can still identify it and make sure everything is still lining up. The parabolic SAR, the blue line is above the red. Still see it, which is not going to change anyway. Your Doji's there. You can then enter into this trade. But if we did see it at this candlestick, we have identified the candle on the S1 zone, because as we know with this strategy, we do move from color to color. So if we got in on the S1, which is a yellow, our take profit is going to be the next S1, sorry, not the next S1, the next yellow colored line, to make it a bit more clearer for you. So we have a potential take profit at R7, okay? S1 is where we identified our entry candle. This is our entry candle. So R7 would be our TP. Our final destination for a take profit, but not our first destination. So what I would like to encourage individuals to do is to put on 2 or 3 take profits on one trade. So in essence, you may have 5% a day. You may have to do 1% per trade and put 3 trades on the same currency pair. So you can use your first, if you're entering in on this candlestick, you can use your first take profit to be, that's a good 15 pips. Your first take profit would be S3 zone as TP1. So you enter your trade, TP1 is S3. Your TP2 could be a potential 24 pips at the P4 zone. As we know, the markets like to reverse at the P4 zone. So having a TP there is not a problem because it will usually hit it and then reverse. So you can have your TP2 at the P4 zone, and then your TP3 can be the ultimate 46 pips at the R7 zone for your final destination. And as we have seen clearly in front of us, this has moved beautifully in that direction, rejecting off of the R8, now potentially moving down to start that sell trend. Our stop losses are going to be calculated as per our first parabolic star that started the trend, our very first parabolic star that started the trend. So if you go and get a horizontal line, you place it directly on the parabolic star, and you will be able to read your your stop loss to be 0.70678. Whatever color line is you've put for your stop loss, right? Whatever line that is, that would be the exact same color that's showing up on the right hand side, so you can identify the number easily, right? So your stop loss is this, and as per this calculation, your stop loss would be 20 pips, which is a good stop loss. That's a good stop loss. 20 pip stop loss to a maximum 40 something pip gain. All right, that's a 2-to-1 risk to reward ratio. That's not bad. All right. Any questions?
No questions, Safi. This just looks like a perfect entry if you'd caught this one when it went live. You know, when the trend changed.
I agree. I've got FOMO right now, but it's okay.
Yeah.
It's okay.
Sorry, I joined while you were going through the explanation. Did you look at the overall trend apart from this bit of consolidation?
Yes.
That's an area that I'm sort of trying to identify a bit more, the overall trend of the market.
Yes, we looked at the overall trend of the market, stating that it is a downwards moving market. Yeah, trend is moving down overall. Although we are in an upwards movement, it's important to look at key points that the market has been at before and what has it done. So we can see that the market has, in a downwards movement, it created a higher high, a higher low at the R8 zone. Previously, it rejected, well, not rejected, but I can say rejected and came down to obviously the -2. It's moved back up again, did not get to this area. It's come down, making its consolidation. It's moved back up. Now it's pushed all the way up to R8. What have we seen it done at R8 previously? Is reject and come down. We could be looking at that potential, that same thing happening, unless because we are moving down, you know, it's not likely to create a higher high here, because on a downwards moving market, we create higher lows. So this high is higher than this previous high. So higher low is lower than this this high is lower than this previous high. This high is lower than this previous high. This one is lower than this previous high. This one is equal. So most probably it won't go up past it, because we are in a downward trend. If it does, then we're breaking structure.
From the color to color would mean it only should go to maybe R7, isn't it?
Absolutely. And it's dead on.
Done it, yeah.
Well, R8 rejected off, which is fine, because it did that here. But for our analysis, we would have been out at R7.
Yeah, good. That's a textbook.
That is, isn't it? It is. I feel like I need to just be sitting at this thing all day. I need to not do nothing and just be sit here just all day, just scanning through the different currency pairs every minute, just watching. But then no, that's not what I want to do. So, you know, I mean, what currency pair is this? AUD CHF. It does move good though. It does move good. It does move good. And also, I can't stay on long today. I'm sorry, because I was a little bit late and I have a meeting at 8:30. So I do apologize, but I will post this on our YouTube channel and I will send it into the group so those who missed the beginning can catch up to it. But I would say, as per Eugene's sort of challenge from last week, he did say focus on a currency pair, I believe it was. I'm going to ask him to reinstate what he said. But I would encourage everyone to really just this week, if you can just for this week or for the next couple of weeks, just focus on a currency pair, one or two. I mentioned this to Sonia last week, 1 or 2 currency pairs. Just focus on them. Just try to identify how they move. Try to see if you can catch the moves early on pivots. And it should be easier to do that because you won't be busy, you know, or distracted looking through all the other currency pairs, right? So you can just sort of focus your attention on one currency pair or 2. Because the strategy is really good, but it's so much more effective when you are able to catch it early. Like this silver one would be an early catch. If it breaks above P4 zone, I want to see it clearly, because as we can see, resistance, 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 resistance. I need to see it clearly close up here before I'd even think about getting in here, because it could be tricking me, right? The market likes to do sometimes. It likes to trick us. So here is an obvious uptrend, right? Uptrend. So on the uptrend, it creates higher highs. So when this does go up, you know, we will be looking at it going up pretty far. If it doesn't start rejecting off of this R7, R6 zone and start to move down. So it's just some things that we have to look at, look into a little bit more as well before we really take the trade. But I hope that's helped with you guys and with your analysis. I really want you guys to continue looking at this, continue mastering it, really get to understand it. You know, every strategy takes time to fully understand. So like I was saying to Sonia last week, don't cheat on the strategy with another one just because you haven't quite grasped it yet. Like, just take your time to grasp it. It will come. The more you look at it, the more you see it, it will come. And just be patient and just keep practicing and recording your results and looking back, you know, back test, look back to see what has this been doing in the past, what's the pattern. And if you get really advanced, you can go over to TradingView and start to look at the bigger trend and the daily and the hourly and the, not the hourly, the 4 hours, and to see what is the overall, because there's a trend within a trend, you know, and when you can see the trend within the trend, you'll be able to see that the short-term trend is usually going to get to a certain point, maybe long-term though, before it starts to reject. So we can look at that in other sessions as well. But, you know, definitely practice and be patient and record your tradings and focus on 1 or 2 currency pairs. All right, guys. Thank you. Hope that's been helpful.
Yes,
Hope,
thank you very much.
hope that's been
Thank
helpful
you.
for you guys. You're welcome. Let us know how you get on. And
Thank you.
you're welcome, guys. Take care, everyone.
Bye. Bye, everyone.
Bye.